Alright everybody, how's everybody doing today? So it's Robert, and I want to make this video for everybody. I've actually been wanting to make this video for a while now. Finally got time today to do it. It's about 10 p.m. on Friday, and I want to make this video to highlight and review my Friday trades that I made. I had 110 pips today on Friday to close out my week and head into the weekend with some nice handsome profits. 110 pips for one day is not bad. And I also want to go over kind of the new strategy that I've developed, the new methodologies I've been implementing into my trading, where I learned them, and I'll be giving credit to the right people where the credit is due. And I also just want to kind of talk about the markets in general and the importance of educating yourself and why it's important to find the right mentors and the right people to learn from. So before I get started, I do want to apologize ahead of time. I am overcoming a cold, so if I sound congested or anything, that's why. I'm still a little sick, so just excuse me if I cough a couple times or sniffle and whatnot. It is what it is. Just trying to get over this cold. So I actually also want to apologize to a lot of the mentees. I get a lot of messages from a lot of people in the Mentor Tips family. I haven't been able to answer them all as timely as I'd like, and I'm sure there's still some people that I forgot to answer and get back to. Don't take it personally. I am a pretty busy person. I do have a pretty busy life outside the trading and whatnot. And for the past month and a half to 2 months or so, I've actually stopped trading live up until this last upcoming week. And the reason why is because I found a new education course to work through. And this education course by this mentor that I found recently really kind of freaked me out, to say the least. I got really freaked out because I realized very shortly in time with going through this course that everything I've been doing up until this point has really been bullshit. And I really realized that I didn't know a motherfucking thing about how these markets worked and why they do what they do. And I realized that there was no future in what I was doing. Even though a lot of people will look at me and say, oh, well, you had some nice profits here and there, and I did. A lot of people here know that I used to kill it, or so forth. Used to kill it, okay? I don't think I used to kill it at all because I didn't know what the fuck I was doing. I consider everything I was doing luck, really. There were some months, I think there was a month where I went 19 for 19, perfect trades, never lost a trade. The pictures in the Facebook group somewhere, if you go back far enough. And a lot of people, said I was doing great, and I got a lot of positive feedback. I even remember Reza messaged me directly and said, you're doing good, you're killing it, keep it up. And I look back in hindsight on what I was doing and the strategies that I was implementing, and it freaks me out that I was doing what I was doing. It really does. Because the knowledge and the depth of knowledge that I have now is tenfold what I knew back then. It really is. And basically what happened was I came across ICT, Inner Circle Traders material, and ICT is Michael Huddleston, and I've actually kind of wanted to make a little video about his stuff for a while, but I haven't because I don't want people to get the wrong message from what I'm doing here. I'm not trying to deter people away from Mentor Tips and tell you guys to go somewhere else for your education. I'm not doing that, okay? I'm just telling you guys how it is that I made my 110 pips yesterday and what it is that I'm doing, because people ask me, I get asked questions. What do you do to study? Where did you learn this? Where did you learn that? What's your strategies from? And I'm going to give credit where the credit is due, okay? And everything that I've done, okay, for the past 2 months, okay, has been involved with ICT's trading strategies in his curriculum and education. And yesterday, my 110 pip day was all accredited to what I've learned with ICT. And I want to share that and let you guys decide if it's for you or not, if it's something that you want to learn and pursue, okay? Because I'll tell you that it was something that I got addicted to and hooked to, and realizing some of the concepts really freaked me out in how I was trading, and that's why I stopped trading live, because there was no long term in what I was doing. Okay, now I make this video now because Reza has mentioned publicly that Michael Huddleston is a good guy. He's a knowledgeable trader, and etc., etc. They're kind of buddies now. Okay, now the way I came across Michael was 2 months ago or so. I saw in a Periscope session Reza was talking shit about ICT. Someone asked, is ICT's education good? And Reza said, ICT is shit. I think that was his exact wording, to say the least. And after that was said, Michael released a video on YouTube. It was a trading review video, and somewhere between the video, he made a little comment in response to Reza's comment. And it really changed my mind about a few things. And the way he spoke and the things that he knew captured me. And I had to watch the rest of the video. And as I started watching the rest of this 2-hour video, I realized this is a guy I want to learn from. There's no one else out there that I want to learn from. This guy sounds like he knows what he's fucking talking about. Okay? And then I started researching, doing my own due diligence, and I figured out that this guy is a real deal. He's probably single-handedly the best mentor out there in regards to Forex education. Okay? This guy's concepts are one of a kind. No one else has them. There is not another mentor out there that can teach what he teaches, and that is rare, because most mentors and most Forex courses are all teaching the same bullshit that you can get from textbooks. Support and resistance, bullshit indicators, bullshit harmonic patterns, bullshit ABC patterns, bullshit wave theory. All this stuff is what the market makers and the order or the dealers, okay, is what they want you to know and what they want you to learn, because they don't want you learning what they know. Okay, you see all this on the chart right here, guys? This is smart money movement. Okay, and smart money is an ICT concept. Okay, we refer to the banks, the major dealers, investment firms, hedge funds, okay, as smart money, because they're the smart traders. They move price down, up, and down. They're the ones responsible for what you see on the charts. It's not retail traders. Retail traders don't do this. There's no liquidity in retail to cause price to move 120 pips upward or 90 pips down in a day. There's no liquidity there, okay? That is a byproduct of smart money, okay? Now, basically, most mentors and most teachers that I have found have been teaching the same stuff, okay? The indicator stuff, the shit that you can pull from textbooks, okay? The textbook stuff. And none of it works. None of it works, okay? And I can say this with the utmost confidence, because there were so many times in my own trading that I realized the indicator wasn't working, or price blew through a resistance level or something like that, or it keeps going lower when it's already severely overbought on the stochastics and RSI, etc., etc. And do you know why most indicators don't work? It's because the smart money, they're going to do whatever the fuck they want with the price. If they want to take price lower, there's no one out there that's going to fucking stop them. An indicator's not going to stop the banks from moving price lower. You have to be insane to believe that your RSI indicator is going to prevent the banks from moving the price lower. Okay? It doesn't work that way. Let me show you guys. Euro USD daily chart here. What do we have on Stoch and RSI? Since here, this candle, we have been on the severely overbought area. But look, it continues to trade lower. It's still poised to go lower. That's because the banks don't give a fuck about your little indicator here. They don't care what your little RSI is telling you. Okay? And they're going to take price where they want to. So, what hooked me with ICT was he has the knowledge on how smart money trades and how the banks trades. He's been doing this for 20 years. And he has quite the track record. Quite the track record. He's been trading twice as long as Reza, and it's not to take anything away from Reza. Reza is a great mentor. He's great with his business knowledge and methodologies. He's a great motivator, inspiration, and he is a good trader, okay? But I'm a firm believer in having multiple sources of input from badass motherfuckers, okay? A lot of people only get one source of input in their life from maybe one great person. Imagine if you can have two sources of input from two great individuals. Where is that going to take your trading? Okay, it's going to make your trading a lot better. So, I came across ICT's curriculum, and I dove into it, you know, just as fast as I could. And I stopped trading, I got my pad out, and I went heavy into it, okay? And now, I see the markets in a different way, okay? Most traders, they are all in the same cave with one another, and they're reading the shadows on the walls, and they think the shadows on the walls are the reality, okay? And it's not, okay? ICT, Michael Huddleston, he invites you and I to step out of the cave to see the charts, to see the markets in a new reality, okay? A new, clearer sense, okay? And that's by understanding how the banks operate and how the smart money trades and how to trade with them instead of against them. Because I don't know about you guys, but I'd rather not duke it out with Citibank, okay? And I see so many times people are trading against the smart money, and then they wonder why they get stopped out, their stops get raided, or why they get sucked into a trade and now they're 30 pips down or 60 pips. I just literally watched, I saw someone post on Mentor Tips on a gold trade saying they're like 120 pips down. It sucks for you. Sucks for you because you don't know the shit that I know. Alright? And you know what? I hope you watch this, whoever you are, because I hope this video will change you and you'll seek out better education somewhere. Because if you're stuck in a 120 pip drawdown, there is something fucking wrong with your equity management. Something seriously wrong. If you're stuck in a 120 pip drawdown, okay, there's something wrong. You need to change what you're doing immediately. Okay, so we're going to get into the charts here in the strategy that I implemented. So one of the strategies at ICT is trading what we call the daily range. And the daily range is the range between the daily high and the daily low. And it's a quite a simple concept to understand. So the major pairs, okay, have a daily range of around 100 pips. That means from the high to the low during each day is around 100 pips, roughly. Okay, let's go back in time and look at that. So here's the fiber, Euro USD. Here's Friday's trading. I have vertical lines here that delineate the days, okay, period separators. So Friday's trading. Here's the high, and it trades all the way down 90 pips to the low down here. Okay, so that's a 90 pip daily range. Okay. This day, it was an up day. We opened down here. Here's your low to the high. You get about 68 pips, 69 pips or so, 68 pips. Okay. We'll go back a little bit further. Here's Tuesday's trading. Tuesday's trading, we have a high here, all the way down to the low, about 95 pips. Okay. So the concept of the daily range is you want to grab the market on a down day near the high of the day, okay? So here's a down day. You want to be entering near the high of the day, around this mark, okay? Here's Tuesday's trading. Tuesday, here's a high of the day. You want to be entering around here and holding for the daily range, okay? Now imagine, you can hold for 90 pips. Yeah, it's possible that you can hold this sucker to 90 pips, okay? Now you don't know it's going to go down 90 pips, but on average, the daily range is around 100 pips to the majors, okay? There's no reason why you can at least pull 30 pips or so from the daily range if you get the day's direction correct, okay? If it's going to be a down day or if it's going to be an up day, okay? As long as you can figure that out, there's no real reason why you can't extract 30 to 60 pips or so from that daily range, right? And you're not in the markets a whole lot, guys. You're not taking 15 to 20 scalps a day. Okay, let me tell you guys something. Real traders, professional traders, they're not taking 10 scalps a day. They're not taking 6 scalps a day. Okay, you want to limit the amount of time that you're exposing yourself and your equity to the markets. Okay, the more trades you're in, the more times you're going to lose. Okay, I took a cable trade. Okay, my cable trade, I made 90 pips on this range here. 90 pips off 2 trades. How many trades do you guys have to take to make 90 pips? Okay? I know a lot of you guys are scalpers here. How many trades does it take you guys to get to 90 pips? Right? It took me 2 trades to do it. Right? I'm not in the market a whole lot. Reducing my exposure. That's key. Okay, so we're going to look at the Euro USD here, and I want to show you guys the real concept behind this daily range theory and how it works. So I'm going to go to an open, high, low, close chart, and I want to show you guys something. This has been in front of your face since day one, since you've been trading, and most people never realize this. Okay, and this is a concept that Michael Huddleston learned from his mentor Larry Williams, and he's passed along to all of his students. Okay, and the concept is on down days. Okay, look at what happens on all the down days here. I just want you guys to take a look at the candles as they go down. Here's a down day, down day, down day, down day. Look at how these candles are arranged. So we have an open here and a high formed. Down, low formed, and then close above the low. Same thing here. We have an open, a high above the open, a low above the close. Okay? Same thing here. Open, high, low, close. Okay? Now, here's a theory, guys. If the market is poised to trade lower, okay, or you're poised to have a down day, you think that the entire day is going to be a down candle, okay? The high is going to be formed within 40 pips of the opening price. Okay? Within 40 pips of the opening price. Let's look at this candle here. I'm going to bring up my data window. Where's our high? The high is at 1493 and the open was at 48 or 1485. Okay? So within 40 pips. This candle. Our open was 1374 and the high was 1379. 5 pip above the open there on the high. Today, Friday, on the cable, or sorry, on the Euro USD, the open was 1192 and our high was the 1200 handle. Okay, 8 pips was the high above the open within 40 pips, right? And that's what we're talking about. So now, your objective when you're trading the daily range is if it's poised to be a down day, you want to be executing a trade preferably above the open within 40 pips of that open as well. Okay? And then you want to hold it as it trades lower. Okay? So now, we're going to go back to my main chart that I have here. Let me go ahead and go to my chart, my Euro USD chart. So here we are. Here's the Euro or the fiber. Okay? Here's Friday's open. Okay? As Friday opens, you can see the market trades up during Asia session, then it trades down, and then during London Open, which is 6 GMT, right here, at 6 GMT during London Open, price rallies upward to form the high of the day, and then price falls out of bed and trades lower. Okay, so I'm going to explain to you guys price and time theory. Okay, and this has been laid out on these charts for a very, very long time, and it's been in front of your face. And if you can understand price and time theory, you can be a badass trader. You see my charts here? I have no indicators on here. There's no diagonal trendline bullshit. Okay, none of that fucking stupid stuff. Okay. There's no Ichimoku cloud, no Heikin Ashi, no moving averages, no Stochastic RSI, because that stuff doesn't work. It's time and price theory, guys. This is how the market makers work and operate. And I'm going to explain to you guys how this stuff works, okay? So, we know that if we're trading the daily range now, okay, we want to execute a trade and enter a position above the open within 40 pips of the opening price as well. Well, on the fiber here, our high was 8 pips above the open. Okay? How do you know where the ideal position is for entry? Okay? Well, over here, this was Thursday's trading. This swing high here and this swing low was formed during the New York session. Okay? Session high and lows are important. Okay? They offer you an opportunity to spread a fib. I'm going to spread a fib across the New York session high and the New York session swing low. And you can see during the London session of Friday, price trades right up into the 62% retracement level here of the previous day's New York session. Okay? Now, down here, this does look like an indicator to people, okay? It's not necessarily an indicator. What it is it's a delineation in time periods, okay? So, we understand that the average daily range, okay, on a down day forms a high within 40 pips of the opening. Now, when does it form that high, though? Okay? So here's a theory, guys. The high of the day on a down day is formed between 6 GMT and 10 GMT. That's what this red line is here. This is called the ICT London Kill Zone, between 6 GMT and 10 GMT. Okay, and that's because usually the high of the day on a down day is formed within 4 hours of the London Open. That's where you're looking to execute a trade. Look at where the high is formed. The high forms at 9 GMT. 9 GMT, inside the London Kill Zone. It forms at a key fib level, 62% optimum trade entry, in the ICT London Kill Zone, and boom, she tanks. Okay? Let's go into a 5-minute chart so you guys can see it a little bit more clearly. Let me zoom over here. Okay? Here we go. Here's previous day's New York session high, New York session low. Here's Friday's open. It opens in consolidation. We make a little rally here up to the 62 retracement level. Then it starts declining. Then when Asia closes, during the London Open, we rally back up. Now, this rally up is a false rally or a false break. This is market maker manipulation. They are tricking the neophyte traders into thinking that the fiber is poised to trade higher for the day. Why? Because they want to get stupid retail traders in long positions so they can keep them in those long positions and stop them out eventually. Right? Right? Now, you see right here, for those that got short right here, they called the direction correctly. Okay? They got short here. That's the correct direction for the day. But see how when London opens, when the smart money gets in the market, they bring price up just above this swing high right here. Why? Why do they do that? Let's think about it. If you got short right here, where's your stops going to be? Right above your swing high. So there's going to be buy stops here. Okay? So smart money during London Open, they're going to fake out the retail traders, get them in long positions, and for those traders that were correct and had the market short, they're going to stop them out. They're going to bring price up above this swing high, and they're going to trigger those buy stops. And when those buy stops get triggered, they turn in market orders. Market orders for who? For smart money. And they take the liquidity above the swing high here, and with that liquidity, they take the market lower, and the fiber falls out of bed. Boom. This is the type of stuff that you need to learn if you're going to be a badass trader one day. This is the type of stuff you need to learn. Let's see where my entry is. I'm going to bring up my entry. Here's my entry point on the fiber trade, 1189. 1189. 1189 was right here. I got in at this candle. I watched the stop rate occur, and I watched the reversal here, an evening star, at my key fib level. I watched it trade down, and I was satisfied here. I got on my trade, in my short. Now, I got out at 20 pips, okay? Got out very early on in the trade. And the reason why was because at 20 pips, I was trying to remove half of my position and take some profits. As I was trying to do that, I accidentally closed the entire trade. Whatever. I'm not going to be greedy. It is what it is. I'm telling you guys, this setup will happen again. Am I pissed that I didn't hold this thing for at least 60 pips because it went down 90 from the swing high here to the low? Am I pissed that I didn't hold it for at least 30 or 60 pips or so? No, not really. I'm going to get it again. They happen. I did it for cable. Cable, I got 90 pips from it. But as far as fiber, only getting 20 pips on a 90 pip move, whatever. It is what it is. I had zero drawdown. I'm not freaking out. It was the least stressful trade I've ever took in my life. With the utmost confidence. Okay? That's the idea with the daily range. Now, there's more to the daily range concept than time and price theory, okay? So, as the market forms a high during 6 to 10 GMT, or 4 hours during London Open, okay, price will trade down. Then, when the New York session opens at 12 GMT to 15 GMT, in this time zone, usually what you find happening is you get a retracement of the London session move, okay? And you can see that we kind of got that here. There's some consolidation here. So if you didn't get in on the trade up here during London kill zone, you get another opportunity to enter down here as it retraces upward, okay? And you get a couple swing highs here. You could have re-entered here, and then the market trades back down lower, okay? So that's the idea with the New York kill zone. So that's this blue line here. This is a New York kill zone. And this is your second opportunity to get into the market in case you missed it on the first one. Or if you want to double up on your position and re-enter on a new position on a retracement, you can get in here, okay? Excuse me. So now I'm going to give you guys another example. We're going to look at a case study here to prove to you that I'm not just kind of like cherry picking here, okay? I called this move lower. I have the proof here, my trade, okay? Now, how did I know the market was going to trade lower? That's one of the questions that you're going to have to figure out, okay? How do you know you're going to have a down day? Well, one of the things that I look at for market direction and directional premise is the dollar index, okay? I want to determine, are we in a risk on or risk off scenario, okay? Now, on a daily chart, you can see the dollar is trading higher. This is a risk-off scenario, meaning you should be buying the dollar and selling foreign currencies. When you come down to a 1-hour chart, you see the same thing as well. The dollar has found support, and it's broke resistance here to the upside. Okay, you want to be selling foreign currencies and buying the dollar. You are in a risk-off scenario. So, based on the fact that the market currently, on the short term and on the long term on the daily, okay, is in a risk-off scenario, you want to be looking to long the US dollar and you want to be selling foreign currencies. And that's what I did here. I want to look to sell foreign currencies and buy the dollar. I'm looking for down moves. Okay? If we come here, let's look at, I want to show you guys Tuesday's trading. Look at Tuesday's trading here, guys. We open up, we get a high formed here. Okay? Where's that high form? Well, let's pull my fib from the previous day's New York high, which is right here, in the New York session low. Okay? We're in the blue. See this high? It's just near the blue here, and the low is still in the blue. So this is all during New York session. Okay? Where do we trade up to during Tuesday? We trade right up to the sweet spot here, the 62 to 70.5 retracement level, and then she falls out of bed. And then what happens as price heads into Tuesday's New York Open? You get a rally in price. Price rallies. It retraces. Then it pulls back. Okay? Just like what we talked about over here. Okay? The high formed during London, down during New York, consolidates or retraces a little bit, gives you an opportunity to enter again, and then trades lower. Okay? So, now we'll look at my cable trade. Here's my cable trade. Okay? So, here's cable, and I held this guy for some handsome profits. I got 60 pips on one of my cable trades, and then 30 pips on my other cable trade as well. Okay? Some real handsome profits here. Okay? So, I'll show you my first entry. The first entry was at 46.82. Okay, so we're going to mark out where 46.82 is on the chart. Okay, 46.82. 46.82. Where are you? 46.82. It is right here. Okay, this is 46.82. Okay, let's go to a 5-minute chart so it's a little more clear. 46.82. Right here. Right at the top of this white candle. Okay? Right here's my entry. Entry. Any drawdown? Nope. no drawdown. Now, how did I know price is going to come up to trade here? Well, if we look at the previous day's New York session high and New York session low, and I spread my fib across that, and we go to a 5-minute chart, look where price trades up to. Price trades right up to a 62% optimum trade entry. Boom. Right? And that's the high of the day. The high of the day forms above the open within 40 pips. Excuse me. Within 40 pips. Okay? We trade up. Boom. 62% optimum trade entry. Down. Held it for 60 pips. Where did I get out? Here's my entry. 60 pips. Right here. I got out right before the New York Open. Why? Because I know during the New York Open, price tends to retrace. Okay? Now, if you fail to get in here, what do we talk about? You get a second opportunity here. Okay? Let's spread a fib from the New York session or the London session high, London session low. During New York, look at where it retraces, right up to another sweet spot. 70.5% retracement level. It pegs it. Boom, you could have got in there during New York if you missed it during London. Multiple opportunities to get in this down today. Okay? So, my second trade actually occurred. I got in on cable, again, at 46.53. 46.53 is right here on this white candle. As we are trading down, as New York opened right here, see where New York kind of opens right here at about 12 GMT? Okay, pretty close to that opening, we get a little retracement. I sold in again in that retracement. Why? Because I know we're poised to trade lower for the entire day, okay? And I doubled up on my position because I felt fairly confident. Okay, we get a little retracement here. I sold it again. Okay, it could have been a quick intraday scalp, and I only held it for 30 pips. So a little quick scalp. Sold it here. That one went into maybe like, I don't know, 3 pip drawdown or so, and then it turned around right here. Boom, held it for 30 pips. So I got in right here at 46.52. Held it for 30 pips. Where's 30 pips? Again, I got out right here, right before the New York Open, when it really made its retracement. Right up, boom. I could have entered again, but I already collected at this point in time. At this point in time, right here, I already made 90 pips off 2 trades on this entire down move. I already made 90 pips. Now, I had you have a couple options. You can continue holding across the whole daily range. You got 78 pips or so, roughly, for my entry point. 78 pips. Okay. Could have re-entered another position here, held it. Multiple entry points inside here for intraday trades. Okay. So, I'm not a greedy person, though. Okay. Not a very greedy person. I get one great trade off a nice optimum trade entry with 0 drawdown. Collect 60 pips off it. Take my $600, get out of the market. I loaded up on another position here on this pullback, okay, because price traded back to a key Asia session low right here. Okay, this low right here, if you keeps beeping at me. If you draw this out, this low, the price stopped right there, and that's what I was banking on. Price stopping there and then trading lower, and it did. Okay, so with all that being said, this is the type of stuff that you should know, okay, if you're going to be a professional trader one day, okay? It's not about how many trades you take in a day. You want to limit the amount of time you're in the marketplace, okay? You don't want to be in the marketplace for a long, long period of time. That's how you lose a lot of money. Professional traders know exactly when they're going to step to their charts and open up their computer. They know exactly what time zone they're looking for an entry. They have their take profit levels in mind, and they know exactly where to place their stop. Okay, that's how professional traders operate. And that's what you're going to have to develop if you want to make this a career. in Forex. Okay, so trying to plug in my computer here. I'm like running out of battery. It's kind of being a pain. Excuse me, guys. Sorry. All right. So I am going to wrap up the video here, but before I do, I just want to go and re-emphasize something. The point of this video is not to deter any people from where they're currently learning their material on how to trade the markets, okay? I'm not here to pull people away from mentor tips and tell you go here to learn stuff, okay? I'm just telling you guys what's worked for me and what has helped me out as a trader, okay? And what's took my trading to the next level and my understanding of how these markets operate, okay? And I am by no means quitting mentor tips. People like asked me once, they're like, oh, why are you still at mentor tips if you do this and that? I'm like, well, you know, I'm OG 500, you know, I'm going to be here forever. I was here since the beginning. I'll be here till the end. And I cannot wait for the new stuff that we have in store, the new platforms and everything like that. But at the same time, I want to stress the importance, guys. Don't take the easy way out, okay? Because let me tell you something. The depth of knowledge that I have, okay, and the understanding that I have now, and Michael Helston will agree, if you ask him, there is no secret formula to becoming wealthy in the markets. There's not going to be a robot. No robot's going to do it for you, okay? I don't care who you are, okay? No robot is going to do it for you. No EA is going to do it for you, okay? No indicator is going to do it for you. It comes down to you understanding in depth and in detail how and why price does what it does, okay? And that requires you to learn and understand how the banks operate and how they trade and what goes on behind closed doors, okay? Because not many people know this information. There's not another mentor out there that teaches this stuff. Most people are teaching the textbook stuff, okay? Let me show you the textbook stuff that we all learned, okay? Let me show you the textbook stuff, okay? Where's my Euro USD trade, okay? How many people were taught the straw trend line here? Okay, that's a good trend line, right? Connecting the lows here. Line, we have a low, low. What happens? Price plummets right through it. How many people do you think are buying right here? A lot. Because they think the market's going to go higher. The fuck it is. The fuck the market's going to go higher. Are you kidding me? On a risk-off environment, you think the market's going to go, you think the euro's going to go higher? No, of course not. After we retrace into a New York 62% retracement level, alternate trade entry, the high of the day is formed above the open here, time and price theory. Really? You think that's going to go up? That's what retail traders are thinking. That's how most people are taught. You draw a little diagonal trend line here. It's not respected. It's obliterated to the downside. Destroyed. If you got locked in here, I feel bad for you. You're done. The shit doesn't work. Okay? I've tried it all. I've looked at all the indicators. Okay? The indicators don't work either. Down day. Look at this. A down day. What do we have here? Here's a 15-minute chart. Well, I'll go daily chart. Daily chart. Euro USD. Overbought. It ain't turning around. It hasn't turned around since this candle. It's been overbought since here. And it hasn't turned around. Since this freaking candle right here. The 17th. It's been overbought. It ain't turned around. For the last 10 days, this motherfucker has not turned around. Why? Because the banks don't give a shit. They know everyone's using this shit. They know people are longing right here. Because they're longing off this stupid indicator. The textbook stuff is not what is going to separate you from the masses. That's what keeps you a part of the masses. Okay? You don't want to be like everybody else. Most traders are learning the same crap. A, B, C, D, wave 1, wave 2, wave 3, impulse, corrective, the bullshit. Okay? Telling you guys, I've seen things not respected. I've seen it in my own trading. I can't tell you guys how many times I've been pissed off because I missed an entry, because price didn't go right up to a support level or a resistance level. It missed it by a couple pips, or one of my indicators wasn't respected. Okay? I can't tell you how many times I said that about my own trading. Now it's different. It's a different story. Okay? So I challenge you guys, learn from people who know what they're talking about, okay? If this has fascinated you, what I've talked about, this is precision trading. If the level of precision behind my trading on these 3 trades has fascinated you, I suggest you go learn what it is that I learned. This is here every single day, guys. These trades are here every single day. Tuesday, beautiful trade. Average daily range here. Could have made 90 pips here. Same thing here on Monday. Even Monday if you wanted to. Open, there's your high within 40 pips. Down. Down close. You could have got in here. Here. You have 3 opportunities to make massive amount of pips. It'd be done. Instead of sitting in front of your charts all day long taking short stupid scalps for 20 pips. Sweating because you go into a 5 pip drawdown. Okay? So, with that being said, I'm going to end the video here about 41 minutes. Keep it short for you guys. Not really short. Most people's attention span probably is gone by now. But with that being said, if you guys have any questions about anything that I talked about today, feel free to go ahead and message me directly if you want. But all the taughtings and methodologies that I use in this video are from ICT, and that he deserves a credit for it. Michael Huddleston has put in the work to discover this stuff and then pass it along, okay? And I am just a byproduct of his teachings, okay? And I thank him for that. And I also thank Reza for opening my eyes to a lot of the other things that I know. I've learned a lot from Reza too, okay? But my trading went to a new level because I sought out more information, okay? And that's what I think everybody needs to do. Don't just stop at one person. Learn everything about Forex. Learn as much as you can about Forex. That's how you're going to be a badass trader. Okay? You're not going to get dumber or worse of a trader by learning more about Forex. It doesn't work that way. And Reza would agree. Okay? I think if Reza watches this video, I would hope he doesn't get pissed off at me because I'm promoting ICT here. Okay? I'm just letting people know where it is that I gained this knowledge of the markets and where these strategies come from, okay? Because I'm not going to sit here claiming this is my stuff, okay? I've seen too many jackasses out there steal people's material and not give them credit, okay? That stuff pisses me off, okay? I'll tell you exactly where I got all this stuff from, okay? I didn't make this shit up on my own, okay? This all came from a badass motherfucking trader, Michael Huddleston. He's a real motherfucking deal. And he knows how to trade these markets. And you can put that motherfucker next to anyone and he'll destroy him. I guarantee it. And every other fucking trader knows it too. Okay? He's a different level. He's a different animal. Okay? And he operates with the utmost precision and accuracy in his trades. Okay? And he is one of the kindest guys out there with the most just insane amount of interest in your success. It's incredible. Okay? And him and Reza are combined as a team of mentors, incredible to have, okay? If you can get both of those guys and learn both their stuff, you're going to be one hell of a trader one day, I guarantee it. So, I'm going to end the video here, otherwise I'll start going down more rabbit holes. So, hopefully we'll keep this at 45 minutes. That's a good time. I hope everyone watched this till the end. Like I said, if you have any questions, feel free to let me know. I'll try to get back to you guys. But I hope you guys enjoyed this video, and I hope it helped you, and hopefully it opened your eyes, and hopefully you go seek out this higher level of market understanding, okay? So that being said, everyone, have a blessed day, and bless you guys.